Welcome to Cherry Street Investor Education with Kavita Baratake, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavita Baratake.
Let's get to today's lesson of getting paid and decoding a paycheck. You recall I have shared this multiple times, and if you take anything away from all the 10 sessions, do take away the two things. One is assets and liabilities. You always want to create more assets than you create liabilities. And the second one is understanding which quadrant you fall in and what are the advantages and disadvantages of each of these quadrants. We call this the cash flow quadrant, and it goes by another book called Cash Flow Quadrant by Robert Kiyosaki. So today is like a lot of book suggestions from me. You should, I highly recommend reading these books, especially it's called Rich Dad, Poor Dad. Anybody Rich Dad, Poor Dad, raise your hand. Okay, 2 people read, 4 people. Wow, that's pretty good. It's a great book by Robert Kiyosaki. Highly recommend it. It is all about understanding how you can work, make money, make money, let money make money for you, right? The idea of passive income. And this is conveyed through a story of Kiyosaki having someone he called his poor dad, who was very educated, earning, working in a job, versus his rich dad. He didn't really have 2 dads, but his rich dad, who turned out to be his friend's father, who was a businessman. So he really got some lessons from there. So he shares it through this book called Rich Dad, Poor Dad. And the other one is Cash Flow Quadrant. So if you're interested in learning how to make money work for you, I highly recommend these 3 books. So let's talk about active income versus passive income and the different ways to make money. So when you have active income, you have a job. You might start there. We all have to start somewhere. Not everybody wants to be an investor. Not everybody wants to be a business owner. Not everybody wants the self-employment route, right? So it's perfectly okay to be here, but understand the limitations when you're there from a tax and time leverage standpoint. So as an employee, you have a job and you're going to get paid for giving your time to the employer. So you go to the job, you work every day, you work 8 hours a day, 40 hours a week, and then you get paid for your time. As a self-employed person, you still are getting paid for your time. If you don't work, you might not make money. Example, I have a dentist. I'm a dentist. I have my own office. I still have to go there and look at patients to make money, right? So I'm self-employed. It gives me a little tax advantage, but not very much. Then you have a business where you make other people work for you. You have a whole lot of employees and you have systems in place. And now as long as they work, even if you're out on vacation, you still make money. You're still making money because your business is working for you. It's not dependent on you personally being there all the time. So you might have to be there to oversee these people, or you might hire someone you trust to oversee these people. But essentially, a business owner has a little bit more time, maybe, or not, depending on how they run their business. Finally, you have money that works for you, which is called passive income. So I invest that money and the money makes money for me. I'm an investor, right? So based on where your money is coming from, these are the 4 ways you can make money. And depending on what the 4 ways you use, there are different ways of reporting that income and giving you a paycheck. So let's talk about that today. So like I mentioned in the tax seminar, we have high taxes on this side if you're an employee or self-employed. We have low taxes if you are a business owner and investor, simply because IRS tax codes. IRS is the Internal Revenue Service. They are the organization which basically charges taxes and basically collects taxes on behalf of the government. Now, the way the tax code is written, or we pay taxes, is that when you're a business owner or an investor, you're essentially creating more jobs, you're investing in the economy. So they're going to give you more tax breaks for putting your money to work or creating more jobs and employing more people. When you become an employee, you're employing yourself with an employer, right? The employer is getting the benefit because he's the business owner or they are the business owners, but you're not getting any benefit because you're not really helping the economy besides contributing to that job, right? You're not creating more jobs with your job. You're not creating more money except for yourself, right? So the way IRS tax codes are written is that you're getting more benefit whenever you create more jobs or you invest money into the economy. So if I go buy a house, I'm investing money into the economy. I'm helping, maybe I employ a worker to clean my house. I employ maintenance staff to clean my house, or I own an apartment building. I employ people to run the apartment building for me. So I'm essentially investing in the economy and I'm creating jobs. So let's say you're an employee. What happens? Let's decode a paycheck and talk about a few important forms that you might see when you're an employee. So the first thing is you'll have a paycheck, right? We also call it a pay stub, S-T-U-B, or a pay slip, depending on which employer you're with. So you might have a company name of the employer. You might have the company address. It'll definitely have your name on it. You'll have an employee ID. That will be your unique ID within the company. And then you'll usually have a paycheck where the pay period begins and the pay period ends. So it basically denotes that, okay, you're getting paid for the week, you're getting paid for 2 weeks, you're getting paid for a month, whatever that might be. So let's look at each one of them. And then you have gross pay. Gross pay is the before taxes pay. That's what you really earned, right? And then there are two pieces within the gross pay. There is current. Let's go back a little bit. So within the gross pay, there's current gross pay, which means for this paycheck, what did you get paid? And there's YTD, which means year to date. For the beginning of the year to now, what did you get paid? So if you look at the pay period here, it's 041-2017 to 0415, which is a 15-day period, like a 2-week period, right? Or half the month. And you got paid $57.91.67 for half the period. But year to date, you made $50,367, right? So that's your before taxes paid. That's never going to be what you take home, right? So let's look at what the deductions are. The deductions are pre-tax deductions. So you have 1 and 2 pre-tax deductions. One is $463 for this current pay period. And then it says, what was the deductions for the entire year to date, which means this deduction was taken before you pay taxes and is likely a retirement deduction, right? Or it could be something you paid towards pre-tax deductions. See here, pre-tax deductions. You paid it towards your retirement, which is 401k, and then pre-tax transit. So let's say you take a bus, your employer pays you to take the bus. Or deducts the bus charges or your transportation charges. Those are pre-tax as well. So this is transit for going to your employer. So it totals to 463 in this case, and then year to date it's 108.50. So in this case, it only reflects your 401k deduction. Then we have employee paid taxes. Employee is you, employer is whoever hires you. So there's two pieces here. It's income and FICA. We talk about FICA, which is Social Security and Medicare taxes, or we also call them payroll taxes. And then federal taxes, income taxes. So let's look into this breakdown over here. So we have here employee paid taxes. This is your federal withholding is your largest one. That's the federal taxes that you're paying. And then we have Social Security and Medicare taxes, which is your FICA together, right? These are payroll taxes. So the total of all this is $1,655, which shows up here as employee paid taxes. Then we have post-tax deductions. In this case, there is a specific, nothing is really shown, it's shown as 0, but you can see that there's year to date, it's non-zero. RSU means restricted share units. And you can think of RSU as your employee as assigning some shares of the company to you. And whatever those shares are worth, that might not have been given in this paycheck, but maybe they gave it to you in another paycheck. So that's what the 615309 is tracking. It's the amount, the dollar amount of whatever shares they assign to you, the company shares. It's also called RSU, restricted share units. So notice here that the employer also pays some benefits. Employer, not you, pays benefits. They are matching your 401k, 401k ER match. That's 231. You put money into the 401k, 463. They are matching 50%. Remember, I told you they can match 100% or 50%. In which this case they're matching 50% at 231 because you put 463. They're also paying for your dental, your medical cost, your medical insurance, and I don't know what this ER health cost is. Anyway, they're paying all this, and that's the employer paid benefits to you. So you're never going to see this money given to you, but it's put into your 401k, or it is paid for your dental, medical insurance, and other things, other health costs. So net pay is what you really take home, right, after all the taxes. So you earned $57.91, but what will be deposited in your bank account is only $37.27. That's your net pay. So net pay is after tax and deductions pay. Okay. And year to date, you made $50,000, but you only took home $26,000. Notice the effect of taxes here. You took home roughly half of what you made in the entire year. So welcome to the real world. So your salary from 0401 to 0515 is 5,791, which is the same thing which appears here. And year to date was 40,000. And then let's see what else we have to look at here. These are other taxable benefits. So the employer, let's say, gave you meals at home, work. They provided some food at work. So they charge for the food at work. I mean, they show it on your benefits, and that money is taxable. This is RSU, again, is taxable. And then we have FICA and payroll taxes. This is just recapping everything I told you. Federal income taxes. And then employer paid benefits, employer matching, employer paid health insurance benefits. And this was actually, yeah, okay. So I think I covered everything here. Sorry, I have to go through this again. It won't let me skip the slide. All right. Now let's look at what a W-2 is. A W-2 is an IRS, again, it's Internal Revenue Service tax form used in the United States to report wages paid to employees and taxes withheld from them. Why do you need a W-2? Let's say you want to file taxes at the end of the year. So most employees will file taxes after the year is over. So let's say it's 2023, you won't file taxes for 2023 in the middle of 2023 because you don't know how much you're going to earn throughout the year, right? You'll pay taxes in 2024, but they will continue deducting taxes initially, and then you might have overpaid or underpaid depending on your other deductions. So they either refund or they'll ask you to pay more taxes the next year, which is 2024. And usually taxes are due by April 15th of the following year. So W-2 is basically a form that the employer says, I paid so much in gross income to the employee, and this were the taxes I already withheld from them and paid to IRS. And then employers will give you a form W-2 for every employee that they pay a salary, wage, or other compensation as a part of an employment relationship. So let's look at an example of a W-2. This is what you'd get by the end of the year. Usually early in January is when you get this. When you finish the year, January first week or second week, you'll get a W-2. It'll show you your social security number. This will be your social, reported against your social. You could also be working for someone with a company name. So in which case it'll be a EIN or employee employee EIN number. Anyway, I can't for the life of me. Employer EIN is the employer number in this case. So in this case, let's say I'm a company and I'm employing people. My company number will be different from my social security number. All of you have social security numbers as individuals, but companies get something called EINs or employer ID number. So employer's name and address, employee's name and address, your name and address if you're an employee. And then here, this is where it'll show you the total wages you earn, taxes, wages, wages, tips, and other compensation. This is the amount of taxes that were already removed from your paycheck. You might owe less, you might owe more. We don't know, right? Depends on your tax situation. The Social Security, taxes, wages, and Medicare wages. Now, they also will tell you how much Social Security tax they withheld and how much Medicare taxes they withheld. There's also a column for saying you contributed to your retirement accounts. So it'll show you how much you contributed. They'll show you pre-tax, post-tax, retirement accounts, everything will be here. So how does your employer know how much tax to withhold before they pay you? Withhold, right? Let's say I'm a single person, I'm working for an employer. My tax payment will be different from if I'm married and I have kids, right? So how does the employer know how much to withhold in federal taxes from you? So we use something called Form W2 to tell our employer how much or what my tax status is and how much they should potentially withhold. So you complete it as an employee and let your employer know how much to withhold from your paycheck for federal taxes. And you want to complete this accurately, because if you withhold too little and then come tax time, you might have a big balance due. IRS says you need to pay more, right? If you give too much money, then you'll have a big paycheck or a big refund due, but you don't want that either, because you're giving away free money to IRS, which you could put in your savings account or invest somewhere else, right? You're basically giving a free loan to IRS without any interest. So you kind of want to be accurate with your W-4 and not just fill out whatever, right? You need to understand how to fill this out. It can also prevent you from overpaying for taxes, which means you're putting more money in your pocket instead of giving it to IRS. Although you might get it back the next year, you don't want to overpay. Okay, so you don't want to underpay or you don't want to overpay. You kind of want to pay around what you need to pay. So W-2 is where you tell the employer, so this is called employees withholding certificate. You tell them your name, your address, your town, what your tax status is: single, married, filing separately, married, filing jointly, head of household. Now, if you're head of household, obviously you'll pay less taxes than someone who's single because you have more deductions, remember, because you're taking care of dependents. So you might have more. So that means if you're head of household, given the same income, if you check single or head of household, you're going to deduct less in head of household than deduct more taxes in single. You will also report your social security income because everything is handled through your social. Your employer will file these, put these taxes against your social security number. So by the end of the year, they'll give you a W-2 with your social security number on it. So that this is W-4 and that's W-2. So let's say you're self-employed, you're not with an employer, right? You are taking care of yourself, you own a dental office. There are two ways, again, that we can report non-employee compensation. I'll give you an example of this. Right now, I'm renovating 4 houses. So I employ contractors who are basically contractors who do the work for me and renovate these houses. So they're doing the flooring, they're painting the house, they are changing the appliances, all of that stuff, right? So I pay them. Probably one guy I've paid $11,000. So it's over $600 that I paid him, right? So I have to file a 1099 NEC and give him a 1099 NEC next year, not this year, because everything's reported in 2024. I can give him this year as well, but basically I have to report to IRS saying that, so one copy will go to IRS, one copy will go to him when I file a 1099. And then I'm basically saying that I paid, let's call him Isaac. I paid Isaac $11,000 for this work or services rendered to me. Why is this important? Because Isaac can say, oh, Kavita didn't pay me anything. I don't owe any taxes. But he did get paid from me, so he has to pay taxes on his income. Now, notice that his income is not coming. I'm not an employer, right? He's not my employee. He's a non-employee. He's a contractor that I used to just renovate my house, but it's called non-employee compensation. I'm still giving him money, so I need to report it to IRS. So this is for anything over $600 that you know, let's say someone comes to your house and fixes the AC and charges you $1,000. You're supposed to give them a 1099 NEC, especially if you have a rental property and you want to deduct that cost of the repair from your income for the rental property. You want to make sure you give 1099 NECs. Then there's something called 1099 miscellaneous. So if you have any other miscellaneous payment like rent or attorney fees that total more than 600, you should provide a 1099 miscellaneous. So this is what an NEC looks like. You have a payer's name. So in my case, let's say I'm giving the 1099 to someone, his name, this is my name, payer's name, right? I'm the payer, I've paid him. This is my tax ID number. It could be my social, it could be my employee ID because I have a business. And this is the other side. Like, let's say there was a guy who did my work for me in my house. That's his employer ID, employee ID, or that's his social security or his company's ID, right? And then I give him a dollar amount and say, this is how much I paid him. So if you may pay more than 600, you need to do this every year. And his name, his address, et cetera, et cetera. And if I paid any social federal income taxes, typically we don't pay taxes when you're a non-employee. I just give you all the money. You're responsible for paying your own taxes, usually, right? So I usually don't withhold taxes when I give someone an NEC. So what's a W-9? So how do I know, like I'm going tomorrow, actually I have a form printed out here right now because I'm going to the rental property and I'm going to ask him, hey, give me a W-9. I need to issue a 1099 NEC to you because I paid you $11,000. So he's going to have to fill this out for me. So I have all the pieces of information that I need for this, right? Recipient's name, recipient's TIN, and I need to basically issue this to him, but I need his information. It says, oh, is he operating as an individual? Is he having a corporation? Is he having, what kind of company does he have? What's his business name? What's his name? What's his social security? What's his EIN? I need to report all this in the 1099 NEC. So I'm going to collect it using a form W-9. Okay. So request for taxpayer identification number. You don't send this to IRS. You use it to collect this information. A business that will be paying you will send you a W-9 if you're a freelancer or independent contractor. In my case, I'm paying someone, let's say, I'm going to ask them for a W-9, but I'm taking the form with me to have them fill it out. Okay. The purpose is to record your tax ID number. So let's say I render services to someone, they'll ask me for a W-9. I hope that's clear. So I'll give them my tax ID number. I'll give them my name and address. They will pay me and issue a 1099 NEC. So this is what a W-9 looks like. I already shared it here. Lastly, we've come to the end of this discussion of how you can get paid. If you're an investor, there are multiple ways of getting paid. So instead of a 1099 NEC, you could have a 1099 DIV, dividend, 1099B, which is basically if you sell stock through a brokerage. So let's look at dividend first. Let's say I make dividends in a dividend paying stock. I bought Microsoft and Microsoft pays me $10 a month for every stock that I have with them. I'm just hypothetically saying. That will be reported on a 1099 DIV at the end of the year and say, let's say I have 10 shares of Microsoft, they pay me $10 a month. That's $100 a month. They paid me $1,200 a year. They're going to report that on a 1099 DIV and file one copy with IRS, one copy to me. So at the end of the year, when I'm counting my income, I need to count my income from all these sources as well, right? Same for 1099B. If I sell some stocks and bonds and securities through a brokerage, let's say I go to Schwab is a brokerage, and I sell the stock that I held, then they'll issue a 1099B to me and basically say, hey, this is how much money you made through the stock, so I have to pay taxes on that money. Then I have 1099 int. Int is very short for interest. It reports interest income. So I have a bank savings account and I get paid 5%. I put $10,000 there, I get paid $500, right? So that 5%, $500 a year that I get from them is reported on my 1099 INT. So I have to pay income taxes on top of on that $500 that I earned, right? It's a part of my income. So there's 1099R. So let's say you retire and you take retirement account distributions. If you're 59 and a half, you can take money out of your retirement account. That will be reported on a 1099R. Finally, let's say I have real estate investments. I put money in with other people. We go put all our money together and go buy an apartment building. That is reported on what we call a 1065 or a Schedule K1. And that basically says we are all partners. We bought this property together. Here's our share of income. Here's our share of expenses and deductions. And everything's reported in that form. Now, you collect all these forms by the end of the year. You collect the W-2, you collect 1099 int, you collect 1099 div, and then you go to your accountant or you file your taxes yourself. So I know this might sound really complicated, but welcome to adulting. This is a part of filing taxes. So I'm actually talking to my 18-year-old to see, okay, she needs to file taxes. We're going to go to do it with her the first few times and then let her handle it on your own. So you don't need to remember every form that I said today, but the quiz will ask for some of these. So it'll be good to understand what these forms are all about. So finally, filing tax returns with IRS happens once a year usually. And IRS is a bureau of the Department of Treasury that is tasked with two things. One is enforcement of income tax laws and collection of federal income taxes. So generally, you will file what's called a 1040. It's called an individual form 1040 every year. This is how you report your taxes. You say everything that's applicable to you here. You take your deductions here, standard deduction. You have dependent deductions. If you have kids or spouses that are dependent on you, you can take deductions. You have IRA distributions, interest money, also Social Security, Medicare, all of that stuff. So then you have different forms. If you have businesses, you have 1120. If you have a business, again, coming back to, let's summarize the different ways to make money against all the different forms. So you have W-2, W-4, 1040 if you are an employee. You have 1099, W-9, and 1040 if you are a self-employed person. You have 1099 div, 1099 int, 1099R, 1099B, and K1 if you're an investor. And last but not least, if you're a business, you will file a corporate tax return called Form 1120. So this is all the different forms. And some of these forms are basically issued to collect information like W-4 and W-9. But some of these forms are sent to IRS. A copy is sent to you and IRS like W-2 and 1099. So, and then 1040 is usually sent by you to IRS. All right, let's open it up for questions. I know that was a lot of information. These are heavy topics. And I want to make sure you understand the gist of it, not necessarily every little detail I've gone through today. What's the difference between owning a job and having a job? Great question. Let's go back to this, right? You have a job, you own a job. Difference is you're your own boss when you're self-employed. If, let's say, I took an example of you're working for someone else and you're just going in, clocking 8 hours and coming back. That's you having a job, okay? But let's say you open your own office, you're a dentist and you work in that office 8 hours a day, but you own that office, right? So you come there every day, work for 8 hours, but it's your office, your job, you are self-employed. Or let's say you're a realtor, okay? You find your clients, you go look for houses for them, you're self-employed. Because if you don't work, no employer is asking you to come work for them, right? You're just on your own. If you don't work, you don't get paid. In a job, sometimes you don't work, you might get paid if you have vacation benefits. They might give you some vacation time and say, hey, you know what? You get 14 days off a year. You'll still get paid. You can go on vacation. So you have a job there, but you don't own a job. Okay. I hope it's clear. Self-employed versus being employed. How does IRS know how much money you made from stocks? Does the brokerage tell them? Yes. The brokerage issues a 1099B. And if they give you a copy, they send IRS a copy whenever you sell or transact stock. Buy or sell. Buy, usually there's no reporting. Sell, there's always reporting. So in sell, they'll tell you how much you made between the purchase and the sale, right? What profits, or they might just give you the cost basis of the stock, which means what you bought it for, and then the gross proceeds or the what you made on it, right? How much you want to calculate the profit is up to you. What's 1099? Why is 1099 the number specifically? I don't think there's any meaning. It's just one of the numbers in IRS forms. All the 1099s are used for reporting non-employee compensation or interest income of some sort, interest, dividend. So that's just the form number. There's no specific I don't know that there is a specific reason. It's like they have different parts of the tax code and it might be related to the number in the tax code. I'm not really sure. Good questions though. All right. Can you go back to the organization form for each quadrant? Sure. So you have W2, W4, 1040. 1040 is what you file. W4 is collection of data, whether, you know, what do you want deducted? Single, married, jointly, whatever. With head of household, that's where you declare all that. How much you want your employer to deduct is done by W4. And how much you made is given by employer to you and IRS through W2. So similar here, W9 is collection of information, 1099 is issued to you, or you issue it to someone you paid, and then 1040 is your tax filing form. And this is your tax filing form if you're a business, and these are all the different ways that income can be made as an investor. All right, any other questions? I know that's a lot. Yes, someone asked a great question. If you use something like TurboTax, do you still file a 1040? Yes, you do. TurboTax actually is a cool tool. You go through it, you put all your stuff, it fills out the 1040 and it files it with IRS, right? It's all online and electronic. But yes, you still fill out a 1040. I will go to the homework page. What is better, people work for you or money works for you? Both can be good, but money working for you will be the ultimate freedom, because when people work for you, you have to take care of the people, right? There's still more time that's required of you. When money works for you, you can just let your money work for you and leave, right? You can be anywhere in the world, but when people work for you, you got to be around those people, or at least you have to manage people, right? So there's a little bit more work in being a business owner than being an investor, I personally think. Okay, we'll go to the homework page. I think I answered all the questions now. Let's get to the homework page now. All right. The homework this week is review with their parents. Are they employees, self-employed, or business owners? If they're employed, I want you to ask them for a copy of their paycheck or pay stub, pay slip, whatever you want to call it, and also a copy of a W-2. They would have W-2 for last year, 2022. I want you to review the W-2 with them. You don't need to come here with any information on all of these. That's confidential, but it's just good for you to understand, right? If they're self-employed or consulting jobs, review their 1099 NEC or 1099 of whatever sort they get with them. Do they have a large business? Ask them how they get paid and how do they pay others. You know, if you have a person, you have someone, your parents are business owners, ask them about these things. Ask how they pay themselves. Maybe they're issuing a W-2 to themselves. Like I issue a W-2 to myself. Okay. My company issues a W-2 to me, right? I issue 1099s to others. I don't have employees who are paid. I only have non-employees like contractors. Do they invest, right? Most of them would probably have bank accounts. They have 1099Bs because they have stocks. Did they file the taxes for this year? They obviously use some form. What form do they use? Most of them will use a 1040, right? So I want you to review that. Take a screenshot of this. We'll also send it with the recording, but take a screenshot of this. I'll give you a few seconds there. Thank you again all for joining this week. I hope you got the homework. I think we have all the bases covered. If you want to join us on this Facebook group, we are at Facebook Moneywise Learning. Thank you all for joining, and I'll see you on Monday, 4 p.m. Central, and we will talk about, what will we talk about? Let's see here. We will talk about, I should know, budgeting. You know, how do you budget? Budgeting 101. We will talk about monthly budgeting, having a budget, why it's important. And then the last one, we'll talk about investing. Any questions here? What's my email? It's kavita@cherrystreetinvestments.com. It's in the chat box. All right. All right, guys. Thank you, guys. Have a great evening. Recording will be sent. Please don't forget to do your homework. And that's the only way to learn, is to do your homework, because it'll reinforce what we are learning here. So don't forget to do that. Thank you, everyone, and have a great evening. Bye. Hi, I'm Kavita Bartake. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.